All right, good morning. Today is the 18th of July. It's our first community call. We have first community calls every Friday, midnight UTC. So join us on our Discord. It's live streamed there. We also record this session to be shared on our YouTube and Rumble channel. All right, and this session is a follow-up to our public consultation on Burst Alpha. So if you haven't seen that public consultation yet, do visit the recording in the link below. I'll drop a link in the description so you can follow along there too. Right. So today we're going to be talking about technical indicators, and this session is for those who are new to trading. You could be new to trading in DeFi, and of course, TradFi too. It's both very applicable to both forms of trading. And if you are new and want to level up your trading skills, this session is for you. So by the end of the session, you'll be able to understand what technical signals are, specifically what moving averages are, and we'll identify some commonly used moving averages that traders use to identify some trends and how we can interpret their potential meanings. All right, so let's get into it. Before we do that, of course, disclaimers. This information is for educational purposes only. It's not financial advice. Do your own research and, of course, know your risk tolerance before you trade. All right, with the disclaimers out of the way, let's get started. Okay, so if you're new to trading, you might have seen these charts floating around in your circles. You may have experimented trying to understand these charts, right? So all of these are related to price, and they are called technical signals, right? So they are clues from the price charts that suggest future price movements. Okay? So that's in a nutshell. And these are used by traders to plan entries, exits, and manage their positions, right? And these are solely based on past price and sometimes volume data, and it's heavily used in TradFi and crypto trading. For example, trading stocks, ETFs, forex, and of course your favorite crypto like BTC. Right? These technical signals do not guarantee outcomes. They only suggest possibilities. Right? But it is these possibilities that hint towards a possible a potential trade that a trader can take. And today we are going to be talking specifically about moving averages. Right? So what are moving averages? Moving average is a line on a chart. So you can see the image over here. It's a line on a chart that shows the average price over a period of time. Okay, so every dot or every point on this line is an average of the prices from the last period. Okay, the period can be defined, so that's how it uh, that's why people call it moving, because the period, be it the day, the hour, or minute, moves, and the line gets updated as the price comes in, as new data comes in. Okay, so it's an average of the prices in the period, and it moves with the market, right? And this helps you to see a trend. So if you look at the red line, this is a trend of the average prices, which is currently going down. The green line is also a trend of the prices on a different time period. And the black line is also a trend on a different time period, right? So we'll get into these later, right? But basically, they help traders, or they help you see whether the prices are going up or going down, right? And it also hints at momentum. Like, is the buying momentum, is the price momentum going strongly upwards, or is it going downwards? And more importantly, when two lines cross, when two moving averages cross, that could signal something. All right, it could signal that it's time to do a trade, or hold on your position. So moving averages are very easy to read, and it suggests market momentum. And it's very easy to see it going up or going down. All right, so let's dig into how moving averages are calculated. So I did hint about this. So it's visualized by the time period. So time period is important. You need to know what time period you're looking at. It could be daily, it could be hourly, it could be by the minute. So the data points adjust according to the window of the time you're looking at. And the number of periods used to calculate the average is important too. So, for example, on a 200-day moving average, that uses a 200-day period or 200-time period to calculate that average, right? And there could be advanced moving averages, for example, exponentials, double exponentials, and even weighted moving averages. So those are some advanced ways of calculating moving averages, right? So example here, you can see the black line. This is a 50-day moving average. And what it does is that it takes the last 50 data points, daily data points in this case, and it takes an average of that, and that's how they form the line. So the next day, the new data point is plotted here, and the next day is plotted here, and so on. That's how you get the black line. Okay. So that's how to create a moving average, to plot a moving average on a chart. On the next few sections, we'll be going through some examples of moving averages. All right. So the first example is a moving average pattern called the golden cross. All right. So this pattern utilizes two moving averages. The first is the short-term line, the 50-day moving average line, and the second is the long-term line, which is 200-day moving average line. So we use days to denote the time period, but it could be in minutes or an hourly moving average. So time period can change. So here we're using days as an example. All right. So on the signal, when this golden cross happens is when the 50-day crosses above the 200-day moving average, right? So you can see there's a cross here, and this is commonly known as the golden cross. All right. So what this suggests is that buying momentum is building, right? So more users are buying heavily in the short term as compared to the long term, and it has crossed over the 200-day moving average. So buyers may be gaining control. Okay. So these are commonly seen before big uptrends in price. Right? So that's how to interpret the golden cross or the 50-day, 200-day moving average cross. Right? All right, now we are on to our second moving average pattern, which is called the bearish cross. Now, this occurs when there are two lines on the chart. So you've got a short-term line called the 50-day moving average, and you've got the long-term line called the 200-day moving average. So over here on the right, short-term line is the one in blue, and long-term line is the one in red. And when they cross, this point is called the bearish cross. So what this suggests is that the trend of the price is weakening. So the price may be going down, and sellers may be gaining control. All right. So when you see this bearish cross, when the 50-day moving average crosses the 200-day moving average, all right, this is a sign that sellers may be gaining control and is seen before big downtrends. All right, moving on to our third moving average pattern. This is the pi cycle top. This is a very special BTC signal, and it uses, again, two moving averages, the 111-day moving average together with the 350-day moving average multiplied by 2. All right, so you can see two lines here, the one in green and the one in orange. So those are the short-term and long-term lines. So when the short-term line, the 111-day moving average in orange, crosses above the long-term line, 350-day moving average multiplied by 2, you can see it once in 2018 and once in 2021. So these crosses generally, historically, has occurred during BTC market tops. So following the signal, the pi cycle top cross, we have seen the market do a downturn, and lots of BTC or even crypto traders, other forms of crypto traders, are looking very actively at the pi cycle top to determine if we are at the peak of a market or not, right? So that is the pi cycle top for our third moving average pattern. So in a nutshell, moving average patterns are combination of uh, two moving averages. So for Python clock, it's 111-day moving average and 350-day moving average multiplied by 2. So, and whenever they cross, these are signals to watch. All right. So, do you want to learn more about moving average patterns? If so, if you're interested to learn more, I encourage you to read the Investopedia. They have a very wide and very in-depth um, section on moving average patterns and how to interpret them. Right. You can also Google moving average cheat sheet, and you'll get all the information there. All right, some closing remarks before we call it a day. So the key takeaways here, we've gone through some basic technical signals. So, we've gone through three moving average patterns, right? So those are slightly more interesting form, perhaps, of a technical signal, and it's still very basic, and but it's very good for new users, new traders to understand what's going on in the market, and it's very simple to look at, right? So just find two moving averages, see if they cross, and that's perhaps the price is going to do something, right? So again, no one signal can guarantee outcomes. Usually, traders they uh, combine multiple signals together. For example, candlesticks, RSI, and other technical indicators. Sometimes they could combine sentiment analysis tools, sentiment from news and social media, and that paints a more complete picture about what the market sentiment is. All right, and of course, on a final note, always manage your risk. So don't just trade on moving averages. Try to combine many signals together to form your opinion of what's going on in the market, and always manage your risk. Right. So if you're gonna trade, I advise you to practice on demo accounts first before live trading. Right. Again, it's not financial advice. Do your own research before taking a trade. All right, and if this is too much info, stay tuned for a new feature that we are exploring called Verse Alpha. Basically, it simplifies all of this into user-friendly notifications and user-friendly presentations in our Bitcoin.com mobile app and other touchpoints. All right, and why are we doing all of this? We believe Bitcoin and crypto will be used by everyone around the world one day, and that's why we're here to make crypto fun, easy, and rewarding for everyone. All right, so that sums up our sharing for today. Join us next week, midnight UTC. We'll be going through our notes and plans for the Verse community. We are live streaming every Friday on Discord. The session will also be recorded for uploading on our YouTube and Rebel channel. And of course, join us in the Verse Telegram group, guild.xyz/Verse. That's where all the conversation happens, and you'll meet like-minded folks who are interested in making crypto fun, easy, and rewarding for everyone with the Bitcoin.com and Verse ecosystem. All right. Thank you once again for your attention, and I'll see you next week. Goodbye.